Hello everybody, welcome back to my YouTube channel. Welcome back to my YouTube channel, guys. Hoyundi fuluperani mashapa, wananyana wa muvenda. And if you're here for the first time, welcome. If you're a returning subscriber, a veteran in this channel, welcome back for yet another exciting episode of Risk, Money, and Insurance. So today, this is going to be a very short Q&A session. You guys have been asking a lot of questions in the comment section, and also there's some questions I got on Instagram. So today I thought, let me just unpack all those different questions and then we will take it from there, right? Okay, cool. So the very first question, so I have my notebook with me in case you see me like looking down. I've written those questions down on my notebook. So if you see me looking down, I'm just checking the different questions that you guys posed on Facebook or like on the comment section. So the first one was concerning Overinsurance. And I do understand why a lot of people were panicking, because imagine you've been paying for premiums for all these years and then suddenly the insurance company is like, we cannot pay the money to your family. That will be devastating, right? But I did my research and I also made a few calls to a couple of individuals who have been in the microinsurance space for a while, just to get clarity on what does microinsurance say about overinsurance, right? And as I've mentioned in my previous videos, that microinsurance space is a very, it's not really developed in South Africa. And so the regulation at the moment, this is end of 2020, doesn't state, number one, the maximum number of policies that an individual should have, like the maximum number of funeral covers that you as an individual should have. However, in terms of overinsurance, what they essentially say is that a single life cannot be insured by an amount that is over 100,000. The total amount of money, right, that you as an individual should receive upon the death of a member of your family whom you have insured cannot be greater than 100,000. That's what the regulation currently say. And some people might say, oh, but then when a certain family member passed on, we received more than 100,000. So where this will apply will be in a situation where you buy funeral covers from different insurance companies that are underwritten by the same company. I've explained the process of underwriting in the previous video for those who might not know what I'm talking about. It might be a good idea to go back to that video. So if you are buying essentially funeral cover from different insurance companies that are underwritten by the same company, then the 100,000 limit would apply, such that they will say now when they're paying out, because they need to still underwrite on the claim stage where you claim, right? When they are now verifying everything, they might say that you're actually overinsured. This individual is overinsured because they have a policy with insurer A and B and C, and the sum assured combined is greater than 100,000. So that's where the issue is when we say now you're overinsured, because then they'll say the maximum that we will pay out will be 100,000 and nothing more. So if you have, I think the only way that other people get away with it is they have the church burial society, they will have the community burial society, which, this process of underwriting might not necessarily apply, because they won't consult with the other society to say, oh, this individual died, they will just literally pay out the claim. Then the second one is insurance is a scam. I saw this and I was like, okay. Well, what I can literally say from this one is that insurance is not a scam. It's actually a real business where you as an individual, you are essentially passing on the risk to the insurance company, the risk that you might die and not have enough money to cover, for your funeral, or enough money for your family to leave to live by after you as a breadwinner has passed on. So you're essentially taking that risk and you are passing it on to the insurance company. And honestly, the insurers cannot take that risk for free. They need to make you pay for it. Them by them taking that risk of you dying any point in time from now on, you need to pay literally for that. And because it's a business, they need to make profit. So at the end of the day, it's not a scam, it's just like any other business. Okay, cool. Then the third one is you get less cash back than what you've invested, right? And with this one, I'd say it depends. There are situations where you as an individual actually get more cash back than what you've invested. Now, let's say you take out life cover for 2 million, right? And they calculate your premium and they say, as a 23-year-old female, we will only require you to pay 150 rands a month as your premium. And so take for example, I die 5 months down the line, right? So there are no like waiting periods and whatever, I'm covered right away. If I die 5 months down the line, I've only paid like premiums worth like 5 months worth of premiums. But they can't without exclusions, without waiting periods of more than 5 months, they can't come and say, oh we're not gonna pay out because this person literally just took out this policy, right? I mean, I passed the underwriting stage, everything was clear, we had a contractual agreement that they will give me 2 million when I die, and now I've died, so they need to pay it out. So there are situations where actually you as an individual, you get more money compared to what you've invested. So in this scenario, this unlikely scenario, you have just invested like money less than like 2,000 rands, but in return your family is going to get 2 million. It depends. It's like if you as an individual die early, then in essence, the insurance company is giving you more money than what you've invested. If you die later on, then it's like, okay, cool. The money that you would have invested might actually be more than what you will end up getting out. And someone said, number 4, insurance is a waste of money. Well, is it? In this case, I'd say it's a waste of money if you are going to be buying a product that doesn't meet your needs, or it is a waste of money if you feel you have more than enough financial resources to actually insure yourself, which I believe in this modern day and age, you have to be a trillionaire or like a zillionaire for you to say, I can insure myself. There's a lot of uncertainty regarding when you're gonna die, regarding what will happen to you tomorrow. For example, you might be hit by a car tomorrow such that you won't be able to work anymore. So in that case, I mean, at this age, I haven't saved enough money that can last me a lifetime. So it's not a waste of money. It depends on the product that you've bought and whether those products meet your needs. If they don't, then yeah, it's a waste of money. But if they do, then it's not. Okay, cool. Number 5, I don't need insurance. Oh, you don't need insurance when you're single and you don't have dependents. You actually do. Oh my gosh, I wonder why people say this. You don't need insurance when you're single. You actually do. Because I think a lot of people just look at it from a point of view of death. Like insurance, when they think insurance, they're thinking death. And there are so many insurance products that are out there which don't really cater for death. There are other things that can happen to you. For example, let's say you die, right? The first example. Let's say you die and you have your own personal debts and things that need to be sort of like paid out. Insurance money can actually help. For example, a life cover can actually help towards, your family paying towards that debt, for example. Or another worst case scenario, you find yourself, you at work, maybe you're someone who works on a manufacturing plant or whatever, there's an accident such that like you lose all your limbs, right? So you can't work in that plant anymore because that's where you use your hands and you use your hands and stuff. So in that situation, you can't work anymore, and if you don't have like your unemployment benefit, if you don't have that for in case an accident like that happens, then it's an issue. How are you going to survive moving onwards? We do know like manufacturing companies will give you like a certain amount of money, but that amount of money is not, if you like 23 or 24 and you die at like 90 or so, that amount of money won't be sufficient to cover like, you know, all these expenses and all your living costs and your like rehabilitation costs, your medical bills and whatnot. So you do need insurance, whether you're old or you're young. You do need insurance because a lot of things can happen. Okay, cool. Number 6 is life insurance is expensive. No, it's not. For like, I was checking out codes and things for myself. If you like insuring yourself for like 2 million, you can pay like a premium of 150, which in my point of view is reasonable compared to like a funeral cover where you're covering like 4 or 5 people and you have to, for like 20,000 rands each, and you have to pay like in total 300 and something rands a month. So compare like 2 million versus 20,000. It's not expensive. However, you need to shop around to make sure that you find like the best deal that is out there for you. I always say this, like, find the best deal that is out there in the market for you. Okay, cool. Number 7, it is better to have savings than insurance. Well, the statement is actually made under the assumption that by the time something happens, you would have saved enough money to actually, you know, like continue or cover your medical bills or like pay for whatever, to repair your car or whatnot. But then problem is, as I've mentioned, there's uncertainty in timing of events. You don't know when you're gonna die. You don't know when your car will have an accident. You don't know when you will fall sick, for example, or fall ill. You don't know when something bad will happen, when your house will bend down or things like that. That's horrible. Sorry. But like, you don't know when these events will essentially happen. And so at the point where they happen, you might find that you don't have enough savings, and so you are banked essentially. Then the last one is the life insurance coverage I get through my employer is enough. Well, is it? I think it's very important to just, you know, go back, read your insurance contract to actually understand how much is that life insurance worth, right? That's the first thing, because it might just be like 4.5 times your annual salary or whatever, which compared to the life that you're living, if you're a soft life kind of person, or like compared to the number of dependents that you have, and also compared to the debts that you have, compared to like including all those, like looking at all those factors, that might actually not be enough. And another thing that I would just say with this life insurance or this life cover from your employer is that if it so happens that you get retrenched, right, you essentially lose that life cover. If you move from one employer to another, you lose it. So it's not something that you can hold on to and say like, I got this, you know, like whatever happens, I'm safe, because it's dependent on your relationship with your employer. If you're employed, yes. If you're not employed, if you move from this employer to another, nah. And also this life cover from your employer as well. It's sometimes for some companies, right, when you reach retirement, right, when you reach retirement, they might say like, now you need to like invest in your own life cover and things. So these are the specific things that you need to really look at that employment contract and understand, to say, how much am I covered for by my employer, and what happens when I retire, for example. So that is all. Those are the 7 main things that I wanted to cover in this video. And thank you so much, guys, for coming back to my channel, for watching up until this point. And I know that tomorrow it's Christmas. So from my family to yours, we wish you a merry, 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 merry Christmas. I love you so much. Don't forget to like, comment, share, and subscribe. And see you in 2021. Oh, bye.